Hello and welcome to this ICAEW webinar, Tax and Finance Automation, Avalara and NetSuite's Guide to Building a Resilient Business in 2024, in association with Avalara. My name is Ed Saltmarsh and I am a technical manager within the tax faculty at ICAEW, responsible for VAT and other indirect taxes. I will be facilitating today's session. We very much encourage you to get involved in today's webinar. You can submit your questions to us at any time by typing a question into the Q&A widget, which you'll find at the bottom of your screen. We have allowed time at the end for questions, so please do keep them coming in. Closed captioning is enabled for this webinar. To turn on this feature, click on the CC icon again at the bottom of your screen. Please note these captions are automatically generated, so they may not be 100% accurate. Some useful resources should appear in the chat box shortly. Our speakers today are Chris Park from Avalara and Jamie Sargent from Oracle NetSuite. Chris has 10 years of experience working in indirect taxes and customs and has spent time working in New Zealand, Asia Pacific, the Middle East, before moving to London. He has worked on VAT and GST implementations across multiple countries, as well as indirect tax, process improvement, and tax transformation projects with a wide variety of clients, including implementing tax engines and automated tax reporting software. Jamie is a chartered accountant who has seamlessly transitioned from a successful career as an accountant and director of finance to Oracle NetSuite. Jamie has been working for NetSuite for 5 years, currently as a solutions consultant, assisting organizations in optimizing their financial processes and leveraging NetSuite solutions to drive efficiency and innovation. With a robust foundation in finance, he offers valuable perspectives on the intersection of finance and technology. So I'm going to hand you over to Chris and Jamie.
Great. Thank you, Ed, for the introduction. We're both delighted to be here, and thank you to the ICAEW for hosting us as well. Let me just move into sort of the next slides. This is, as you all know, this is a very, very broad topic, and I very much acknowledge that tax forms a subset of the wider finance function within a business as well. So, Jamie and I were sort of discussing, what would be best to cover, and the approach that we've taken is we've decided to focus on a few specific areas or topics, and then, we'll start broad, looking at it from a finance function before kind of drilling down or taking a tax perspective on things as well. So we have the key topics that we'd like to cover today. I should mention, again, we're happy to take questions, so feel free to kind of throw them in the Q&A section of the Zoom webinar, and we'll try to pick them up, as we get to that topic as well. Before we kind of dive into the topics, we'd like to start with some polls, if that's okay, just a couple of questions so that, Jamie and I can get a better feel for kind of, the function you're in, what keeps you up at night. So I'm going to leave this placeholder slide here. Hopefully you can see the questions popping up. The first question we have, Jamie, do you want to start?
Yeah, thank you, Chris. So yeah, first thing we really wanted to find out is effectively from an audience perspective, what function do you represent? So what function are you currently working in? Finance, tax, procurement, sales and operations, IT, or another. So again, what finance function are you in? Finance, tax, procurement, sales and operations, IT, or other. And again, this gives us a great chance to sort of tailor the content a little bit to understand who the audience is today.
Okay. Any surprises?
No major surprises there. Finance and tax, given it's finance and tax webinar. That's great. And again, it's sort of what we will go and discuss.
Yeah, great.
Awesome. Second question, why did you decide to register for this webinar today? Number one, because you're about to undertake a finance or tax transformation in the next 12 months. Number two, because you wanted to understand better how NetSuite and Avalara's suite of offerings work together. Number three, because you want a better understanding of technology and how that can relieve some of the burden placed on the tax and finance function. Or number four, you just wanted an hour away from your desk, and this was a good excuse. So again, finance or tax transformation project, more of an understanding as to NetSuite and Avalara specifically. A general understanding of technology and how that can relieve the burden, or a sneaky hour away from your desk.
Or maybe it's the CPE credits.
Yeah, okay. So again, more of an understanding of technology and how that can relieve the burden, and we'll talk through a lot of that again. And a few very honest and saying they want it narrow way. So
yeah,
cool.
great. So next question, an easy one. Are you looking to grow internationally or perhaps expand your international footprint in the next 12 months? Yes or no? Hopefully an easy one. Okay, interesting. So about a third have said yes, and 2/3 have said no. Okay, great. That's very helpful. And last question. This one's very holistic, but it's what keeps you up at night. We've put in a couple of different options. One, lack of overall visibility across the organization. Maybe you've got a very fragmented system architecture. Maybe you've just got very different reporting lines. I don't know what would be causing that. Second option, you don't trust in the accuracy of the data in your source system. So you can get the visibility, but you don't trust it. Third, the rapid growth of tax compliance requirements, especially around digital live reporting requirements such as e-invoicing. Fourth, month end, I guess more for more of the finance attendees. Last one is missing a huge payment. So those are the options. Okay. Yeah, so I can see that the 60% of the kind of audience voted for the rapid growth of tax compliance requirements. So I can definitely make sure that we kind of cover that, and how technology is sort of you can't really avoid using technology, given the complexity of the requirements and the fragmentation that we're seeing across tax jurisdictions as well. So we'll definitely make sure we cover that. I can see that the second one, and Jamie, that perhaps this is something that you can pick up. 18% of the audience said that the lack of overall visibility is of concern. And I can see that third one is you don't trust in the accuracy of the data. So 11% of the audience voted for that. So
yeah, and this is what we're hearing from definitely prospects of ours and wider. So yeah, I mean, it's great that there's such a big tax requirement today. I'll let you do most of the speaking, but we absolutely speak to all of these.
Great. All right. Well, thank you, Ed, for kind of running through the polling. So let's start with the first topic. And I think, Jamie, you're starting this one. So the current state of play and any potential trends you're seeing as well.
Yeah, so really this question was asking around what we're seeing in the market at the moment from what FDs, CFOs, different financial functions are coming to us, tax functions, and what we're seeing, from a trend perspective, especially at the moment. So we see massive expectations growing from our prospects and customers that they want their financial systems to do more than ever. When I looked at this process myself as an FD 6 or 7 years ago, it was really just a GL, some AR, AP functionality. But now prospects want to see way more in the way of automation. We see things like billing automation around subscription management, RevRec, matching and reconciliation, depreciation calculations. The biggest one we definitely see is sort of consolidation. So the ability to merge the data, aggregate it, do intercompany automation. So definitely the trend is pushing towards that your ERPs and your systems generally to be doing way more than what they were once doing. And again, I guess the main reasons we see for this are sort of reducing human error, lowering costs, more accurate reporting, and increased productivity. And to be fair, ERPs are way more set up to do this. They have a lot more modules at a decent price than they once did as well, which is great. And actually, in parallel with this, we see prospects happy to adopt leading practices from these systems. So they say, look, we don't want to repeat what we're doing. We want to adapt and adopt what you're currently doing, given that your sort of experience in the space, and we'll change to sort of mirror what these ERPs are doing already. So a lot more flexibility, a lot more adaptability from prospects, but still expectations very, very high.
So I think from a tax perspective, that automation has always been, I mean, who doesn't want to kind of, improve efficiencies? But really what we're seeing and what we're hearing, we do a lot of sort of market research around sort of what the tax functions require, and that informs sort of our product development and our service offerings as well. Is that what we're hearing is cost and efficiency is important, which is really what automation drives towards. But the top priority has now shifted in the last few years towards just complying with the rapidly changing tax laws and regulations. So what that means is where we're seeing the most traction is when you're combining both automation as well as a need for compliance as well. I think an e-invoicing would be a really obvious example of this, because you both need technology in order to deal with it. You can no longer use, there's no manual workarounds you can use. For VAT return preparation, yes, there's always been an automation push towards that, but in most jurisdictions, you can just download a report from your ERP and start putting together Excel workbooks. So for that, it's always been a matter of sort of comparing automation efficiencies, but now we're getting to a point where the tax requirements are so granular and so technology driven that you really have no choice but to move into technology. Jamie, you talked about the higher expectations that businesses have. Are there particular modules or that customers are coming to you for, in order to kind of get that automation that you mentioned?
Yeah, I mentioned a few. I think the ones we see the most are sort of around customers. So billing automation, subscription management. So using your ERP to manage the contracts, sort of upsells, change orders, all the rev rec off the back of that as well. That was something that would sit in an external system or sit offline or sit on Excel or on Word. Historically, almost all of our customers want that managed as part of the ERP in phase one. So that's something that's grown. And obviously off the back of that, we're building modules. All ERPs are building modules to mirror that. And often CRMs are sitting in the ERP as well. So it's a single source of truth from that perspective.
So it sounds like, the first place to start would be to look at the ecosystem that your ERP has to see whether it can offer this additional automation.
Exactly. It needs to be sophisticated enough. It needs the data there. Yeah.
I think the next point we really wanted to pick up, and this was part of the reason why we had the polling question. I think this was option number 2 when it came to sort of rankings, greater visibility. I think, Jamie, you had a couple of things you wanted to mention here.
Yeah, we find even the most complicated, even the most simple businesses are built over multi-sites, multi-departments, multi-locations, multi-entities, multi-regions, etc. So that sort of perspective of needing to see all of your data at once is, again, an absolute mandatory, and it's grown over the years. People could deal with siloed systems a few years ago, but really every requirement we see is very much this visibility, seeing everything all at once perspective. So that's both from your ERP and your financial data, but also we're seeing it a lot more from your sort of operating systems. So because there's this trend of systems moving to the cloud, the access and the movement of data is a lot more seamless. I think people are very much getting over that hurdle and that mindset that these systems need to sit separately, and after month end we'll bring the data together and now we can understand and analyze and sort of consolidate. Those barriers to entry of connecting the data is as seamless as ever. When I was in FD, we had an external expense system, and we thought this is going to be a nightmare to bring it into our ERP. And actually, they'd already pre-built the connectors. It took us 2 hours one evening. The next morning, we came in, logged on, and we could see all of our expense forms, approved all of the sort of project tags against them in our ERP immediately. So a lot of systems are now building it so that you can do these connections yourself, which is really good. And the benefit of this, things like ESG reporting, again, that's a growing trend for that. Reconciliation tools, so pushing your data off and reconciling it en masse. And compliance systems. Chris, you mentioned e-invoicing, but the visibility of data, the movement of data is absolutely inherent in that.
I think from a tax perspective, the visibility used to be a nice to have. You're right. You could wait for the books to close and then, compile the data. But, with requirements like Pillar 2, you have no way to calculate or estimate your effective tax rate, and, to take an overall view on what the liability would be under a requirement like that without having sort of that global kind of greater visibility as well. And I think there's a point to also be made, this is more finance than tax, but, around agility as well. If you do have a holistic view of what's happening within the business, then your ability to kind of pivot and to adapt and adjust. Just as an example, Brazil is one of those countries that has had an e-invoicing requirement for a number of years. They have a centralized model where a copy of the e-invoice gets sent to the tax authorities. So even before the customer's seen your invoice, the Brazilian authorities already have a copy. During COVID, we saw that the Brazilian authorities, as many other countries did, introduce a number of fiscal kind of stimulus measures. But what we were seeing is that the fiscal stimulus measures were changing almost on a week-by-week basis, because the tax authorities, and by extension the government, had a real-time view of what exactly was happening within the business. So they could have very specific grants or sort of percentage-based kind of, turnover-based kind of, schemes on a per industry or even on a per item basis, because of the granularity of the data that they had. So, if you take that same mindset and apply it to a business, I think, that could be really, really powerful. Where, we don't always want to be seen as a back function or an expense. What additional kind of benefits can we as finance and tax provide to businesses?
Yeah,
Jamie, I think this one was you. Yeah.
Yeah, this is a really interesting one, actually. So again, when I think about when I was managing a team, finance team, really the process was you'd book all your transactions, and then after month end, you'd come back and review them, right? You'd have a few approvals in place, but on the large part, that was the month end process. What the expectation is now, especially from a systems perspective, is this real-time validation process. So actually what a lot of our customers build into their systems is, say, they have dashboard reports that say, show me all the transactions that don't align to this particular threshold, to this particular rule of mine. So as an example, when I was managing my team, I said, show me all the nominal codes that have had no transactions booked in the month. So depreciation, payrolls, accruals, provisions, because by mid-month, end of the month, there should be some data there. So seemingly the team's missing stuff. Another one I had was, show me all the revenue codes with debits against them. So as in, why would there be the reverse of what I'd expect to see there? So you're very much managing the 5% of exceptions versus the 95 that adhere to all the rules that you would expect them to. And the benefit is, as you get to the month-end process, all you're doing is validating the 2-3% that you haven't yet checked, because mid-month, start of month, end of the month, you're doing real-time checks on that data. So, the system will send you an alert if something's not done or something has been done outside of rules. So that, combined with really robust approvals and flexible approvals across all your functions, means that, again, month end's massively reduced now, because at any given time, you're 95% confident about the data. We saw that in the poll, Chris, right? That people were still concerned about the accuracy of data. And actually one that we have around tax as well is, show me all the codes that have a 0 or 5% VAT rule on. Or that's very unusual. It does happen, very unusual. I want to just review those, not the ones with 20% that we would expect to see. So this real-time materiality testing, I'm doing what an auditor's doing, but the system's doing it for me, is a massive step forward.
And you're not necessarily having to wait till the books close. You're doing that, during the course of the month. And as you say, that means that a month end is much sort of less painless than, is more painless than you might otherwise expect.
Exactly right, yeah.
I think for tax, I mean, this is all kind of wonderful news for us as well, for tax. But I think for tax, we need to go a step further than that. And it's because of real-time reporting requirements, real-time invoicing requirements like e-invoicing, because by the time you've booked a transaction, and let's say, you've got a business in Italy or in Hungary, but when you generate a tax invoice, that copy goes to the tax authorities. So it's not enough to pick it up at the end of the week or even at the end of the day to realize you've made errors in that transaction. So really what we're seeing is there is a more of a drive to kind of put controls, processes, and governance in place to even stop that error from being booked or posted in the ERP. So, how do you do that? We have sort of a renewed interest in businesses looking to invest in tax engines, for example, that can kind of automate the calculation of tax because they don't want incorrect transactions going through. It's also a matter of having very, very good feedback loops. I think exception testing should always be a part of a finance or tax function. What does the feedback loop look like when you do pick up those errors? Are those actually being fed back to whoever owns the relevant data point in the ERP so that it is being correct? So next time you run the month, you're not seeing the same issues happening again and again and again because no one's going in and fixing it at the master data level, for example. So I think exception testing, great. And the fact that we're moving towards a more regular during the month process, great. But I think for tax, it may no longer be enough, especially with the invoicing coming in as well. I think with exception testing, we will ultimately end up seeing it as an ambulance at the bottom of the cliff, without being too ominous and wanting to scare everyone. But, and I think, there'll be a lot of functionality within the ERP that can help kind of put guardrails in place to even stop those errors being posted. So it's worth kind of exploring the functionality within the ERP as well to be used specifically from a tax perspective as well. My background is very much an indirect tax, so I probably have more examples there, but there could be sort of other controls you can put in place as well. So Jamie, I think BI tools was you had a couple points to make, and
Yeah,
sort of got tax as well. Yeah.
Yeah. I know we both sort of got an angle on this. Analytics and analyzing data is again a growing trend. It was a sort of a nice to have in years gone by. Now the price point of analytics tools, the movement of data from your operating systems into those tools is way easier. So again, those expectations from our prospects certainly are that either in phase one or very shortly afterwards, you are going to get your analytics tool. These data lakes, analytics warehouses, and the benefit that we're also seeing is that people are putting all their historic data in those tools versus the ERP. So there's always been this comparative need to compare year-on-year data, but the price of data in the ERP is way more than what the price is in a data lake. That's what it's set up to do. Every time you run a P&L, do you want 10 years of data pulling through, loading? Not particularly. So all of that data is pushing out, and it means projects are getting way easier because you can do it at a later stage and it's going into a tool designed for it, into these analytical tools. And then at that point, you can analyze not just financial data, not just tax data, but a whole raft of data, operational, HR, CRM, whatever it is. You can do it over there and produce geographical reports, better trend graphs. You can do AI and manipulation on it. We'll talk about that later a little bit more. So yeah, again, analytics is not just a nice to have anymore. Everyone needs to be doing it, and everyone can do it a lot easier.
I think this is another example of where tax can piggyback off, the visualization or the business kind of the BI functionality of an ERP as well. We might want to build some specific kind of bespoke visualization specifically for a tax purpose. I've put in here the arms race with the tax authorities. Let me explain what I mean. Many countries are introducing e-invoicing requirements. I mean, if we look at the European Union, for example, the model that they're proposing is a four-corner model where all the invoices get sent to the PEPAL network, and then the PEPAL network will distribute it to your customers. Fine, it's not reaching the tax authorities, but let's remember a tax authority can always request copies of invoices from you as part of an audit. I mean, that's already the case even without e-invoicing. Now, when we've moved towards e-invoicing, what they could do, because every business is giving you perfectly standardized invoicing data, is they could basically recreate all of the AP/AR transactions that have gone in within your business, and then they could start to run analytics checks off the back of it as well. So if you're not running rigorous analytics trending analysis checks on your bit data, then the tax authorities will eventually get to the point where they are doing that to your data as well. So that's really much what I mean with the arms race. And specifically for tax, we have this concept of a statute of limitation. It's very different for every country, but let's say 4 or 5 years. If the government wherever you're based, maybe in the UK, if they implement e-invoicing, in 2025, and I think the VAT statute of limitation period might be about 4 years in the UK. Correct me if I'm wrong, but then they've got another 4 years to get to the point where they can analyze the data with kind of the tools. So they've got much longer for them to kind of develop that kind of capability. Like, this might be a silly example, but let's say you're a retailer and you're selling sunglasses and umbrellas. They could overlay that kind of information with the weather forecast in the last sort of 4 years, for example, and then start to kind of detect kind of discrepancies, for example, why are there so many sunglasses being sold when it was such a rainy week, for example, 3.5 years ago. So, I think that's kind of the way that we need to start thinking as well.
Chris, do you think it's likely that they will get to that level of verification of data, or you think is that a worst case, you think?
We're already starting to see that in countries like Brazil, so I wouldn't be surprised. And also, I wouldn't want to take that risk if I was leading a tax function. So
right. I guess all this comes down to then having good controls around the source data.
Yeah. I mean, data
to reduce your downstream costs, right? Yeah.
Exactly. Yeah. So I think the next topic that we want to cover is the role of automation when it comes to selling or growing internationally. Now, based on the polls, I can see about a third of the audience were planning to expand internationally in the next 12 months. I thought we'd start with some, let's acknowledge the fact that businesses are expanding and selling internationally much earlier in their growth cycle than ever before. You can be a one-man band and sell to 50 different countries by setting up a website. And of course, the growth of e-commerce platforms as well as marketplaces are making it easier than ever. Now, of course, obviously, from a tax perspective, this means that we have to comply with different jurisdictions. The tax landscape is still very fragmented when it comes to not just VAT, GST, but also customs, for example, as well. We still have slightly different codes for every single country that we need to cover as well. So I'm just setting the scene here. I think Jamie, you're going to kind of go through some best practices to set things up from an ERP perspective, and then perhaps we can take things from there.
Yeah. So again, the barriers to growth, obviously, from an operational perspective, are there, but from a ERP perspective, I would say they're sort of way lower than they used to be. We actually did a poll internally sort of a year or so ago as to what the main concerns were around growth. Things like legal complexities. Legal complexities was number one. Recruiting employees and IT issues is sort of number 2 and 3, and then language issues and accounting issues right up there as well. So to be able to move, you're going to need good systems in place. But actually, we would take that a step further and say they're not just a necessary evil, but good systems very much enhance and mitigate a lot of those risks and concerns. So, for example, if you're going into a new country and you have systems that have good localization reports already there, a certain level of compliance already there, then that ROI in terms of your ERP spend is so apparent, because your risk from moving into new regions is way reduced by having these systems in place. So you need systems that are going to be multi-entity, multi-currency, pre-packaged localizations, and have that ability to go the last mile. And we'll talk through a sort of a NetSuite and Avalara examples of where that works really well. But you've taken advantage of big companies like Oracle that are already in these regions, the economies of scale, all the customers already based there is a great example of how beneficial these kind of tools can be. And as well as the systems, it's sort of having the controls in place to make sure, if you've got a chart of accounts in your local entity, it's not mirroring, changing that, having 3 different chart of accounts, so that your new accountants, your new finance team in your new region are adapting, changing. There are new approvals that need to come in place. So a really quickly repeatable process, moving it across entities, is really important. And something I did again when I was an FD is we opened an Indian entity while I was there. And what NetSuite Oracle had was the ability to have an accounting context on our chart of accounts. So what that meant is our new hires in that region could take the same chart of accounts, but name a revenue code in exactly their terminology, in exactly their language. And we could just mirror those and map those together. So as they're booking, as they're importing, that's hitting our group chart of accounts in exactly the same way. So this multi-gap, multi-language, multi-context ability again is absolutely mandatory in using systems to help you grow, and things like intercompany automation as well. So moving your journals, your allocations, your bills across entities as well. You need automation and that consolidation to it. And obviously the benefit of all this is your growth is with way less exposure, and a way lower cost, in terms of your staff cost, and way more accuracy on your data as well.
Sounds like you'd almost want to turn that into a playbook, and then to roll this out sort of as you expand into
Exactly. Once you've done it once, the growth, the risk of growth goes way down, because you just repeat and replace.
I think from a tax perspective specifically, I mentioned the fragmentation. Every jurisdiction has different reporting requirements, tax rates. Again, I'm speaking more from an indirect tax perspective. The compliance requirements, we said, I think when we did a poll, I think 80% of you or something said that, it's just complying with all these rapidly changing requirements is the main driver, the headache. Not to kind of horrify you, but that burden to keep up to date with all these requirements grows exponentially the more you expand internationally. So realistically, the only way to kind of stay on top of that compliance is to leverage technology. The reason why we partner with platforms like NetSuite is because the ERPs are set up to they have localizations to deal with the local requirements, so they'll come with a domestic tools. So if you use NetSuite for the UK, it'll come with a UK MTD compliant VAT reporting software, for example, or pre-Brexit it would have come with the intrastats and the EC listings. Where we work together, and the way that we're meant to sort of interplay with the ERP is we can augment that functionality for international requirements from a tax perspective. The first taxes you hit as you expand are the transactional taxes. Of course, later down the track, maybe based on distance sales into the US, for example, it's very easy to trigger sales tax registration obligations. It can be based on the total value of sale. It can be even based on the number of sales transactions that are happening into a given state, for example, as well. They have 14,000 tax jurisdictions in the US alone. So, we have sort of an engine that connects up with NetSuite. So for those of you who are selling into the US, to automate the calculation and the filings in the US. So that's an example of a core ERP being augmented with a solution like ours. Where we do best, and where I see Avalara in a business is to help with that international expansion. As another example, we have a team that do customs classification. They provide classification services for eBay. So we turn around hundreds and thousands of items on sort of a daily, sort of a 2-day, 3-day turnaround basis, for example, as well. We can only get there because we have a team of 300 people who are dedicated not to software development, not to doing my job, but who research global tax requirements. So we have teams that focus on, for example, when Trump announced that there'll be steel tariffed impositions on Chinese steel, for example, we had to update that in our systems because we calculate customs duties in our tax engine. When the Italian VAT return changes, we always know that it'll change in January, and it's a mad scramble to get the automated VAT returns updated in our filing software, for example, as well. So again, we're about augmenting what an ERP can do to kind of help facilitate that growth.
And Chris, can I ask, sorry, off the back of that, where would you see in a company's growth the need for a system like Avalara for this sort of tax automation? At what point is it worth having this conversation?
I think it's depends on the product, but very much one to many. So, you've got sort of the core jurisdiction, you're starting to kind of file VAT returns or intrastats or whatever, EC listings in like 3, 4, 5 countries, and then just to kind of do that off the back of Excel is becoming burdensome, when it's too difficult. With e-invoicing as well, we're powering the e-invoicing functionality within the NetSuite environment. In fact, I think the challenge has been for businesses, there is a fragmentation. So the format is different for most countries. The way it's sent is different in some countries. Countries like Portugal need a QR code. Countries like Israel need a serial number to be obtained from the tax authorities and included on the invoice. In Saudi Arabia, the invoice has to be bilingual. So the requirements are so fragmented. So where we fit in is, again, we'll manage the one to many. So we'll take a standard set of data in terms of our e-invoicing solution, So we'll take a standard set and then we'll manage the transformations and the transmissions and obtaining the QR codes, the serial numbers, and manage all of those changes as they continue to grow as well.
And again, do you think this is a growing need? Do you think this is just going to get exponentially worse? Well, I say worse. Do you think the need is going to get more as tax, regulatory bodies want more, want it to be electronic, etc.?
I think it's going to get worse before it gets better. Maybe eventually, as businesses settle on particular ways of working, we might see some kind of harmonization. For example, from customs perspective, we do see that the first 6 digits of a particular item are the same universally, but then, you have fragmentation for the final 8 to 10, 12-digit codes as well. So very much worse before it gets better, especially with new things like live reporting and e-invoicing.
That would be your answer,
yeah.
but
So, Jamie, we've just had a question. I don't know if you have any thoughts on this from Ashwin. So to what extent is there reciprocity between international governments? So we're talking central banks, tax authorities to ensure transactions are taxed and ML avoided. I don't know if you have any thoughts on that or.
Let me reread. Hold on.
Yeah.
This feels more in your ballpark.
Yeah. I think, again, I'm not a money laundering expert. There are people who kind of dedicate their careers to this area, but I think what we expect to see, particularly from an e-invoicing perspective, is starting to kind of trace transactions through a supply chain. So there'll be very little room for error. Any e-invoice that is sent, eventually copies of that will be obtained by the tax authorities. So, again, matching things up, there'll be kind of real-time validation of kind of VAT registration ID. So, there aren't sort of, Ed, I don't know if you had any, I can see that you I can see your thing popped up. No?
Yeah, sorry. I was just trying to keep on top of the questions, but
Yeah.
I think there's always attempts to align international authorities in this area, and organizations like the OECD tend to do a lot of work in this space on working on guidelines for taxes and how they should interact between countries. But I think, as you've been saying, there's varying regulations all around the world, and there's so many different countries that you could be selling to or working in that are just going to have different regulations. So definitely, I think there's a movement towards alignment, but I think progress on that is fairly slow.
Thank you, Ed. We've just had another question. How is automation driving how the finance organization is designed and how the team structure is evolving? Jamie, I think this ties in really neatly with the next topic. So how about we move to that?
Yeah, absolutely.
Yeah,
and
great.
and we can circle back if we don't feel it's answered. Absolutely.
Yeah, absolutely. So on this one, I'm going to start this one. So I want to reframe that question. I don't think it's about balancing, how much you spend on technology, invest in technology versus how much you invest in staff. And I kind of want to take a little slightly different perspective on this. I think let's acknowledge the fact that technology is not perfect. So you want to be in a position where you understand what it can do, whether it's finance, whether it's tax, whether it's anything else. You want to understand what it can do for you and how that applies to your business, how you want to use it. And then you really importantly, you need to understand what it can't do, whatever you do, it won't do. And the reason why I say that is because that's really the area you should start thinking about, well, how can we kind of work around this? How can we mitigate the risk or whatever it happens to be from a people skills, expertise, process and governance perspective? So if I take a tax example, for example, we have a tax calculation engine. It integrates with NetSuite so you can automate the calculation of taxes, both for AR and AP. Great. If you set it up correctly, then we'll calculate tax correctly. Now, let's say you launch new products. So you're adding additional products to sort of the material master and your master data, or you start selling into new jurisdictions, for example. There is no way the tax engine, whether it's ours, whether it's another competitor's, it doesn't really matter. There's no way that we would automatically know what that product is, and we would automatically know that you're suddenly starting to sell into a new country, or that you've suddenly got additional tax registrations in 25 new states in the US, or whatever that happens to be. So that's an area, okay, you acknowledge that there's a limitation there. That's when you want to build processes and say, okay, if you launch a new product, if you're adding to this the master data, then you have to kind of speak to this person who can go in and, into the tax engine, map that out, and validate and do some testing, for example, as well. So I don't know if you have a finance specific comment, Jamie, for
Yeah, I
MTR to
mean,
ask the question.
yeah, similar in as much as the finance function is as well going to have gaps and limitations, because there's not all areas of the finance system that an ERP can know. So things like accruals is very similar, right? It's just outside of the remit of an ERP to know every single piece of work a team is doing, but has an invoice for example, or billed for. So there are tools in place, like looking at timesheet data or expense data, to be able to book these sort of reversing journals, to actually put those provisions in place for that. But like you say, I think the focus will always be on the finance team, the processes to get that right. And I think that's really important. So that automation is all well and good, but we've said repeatedly today, it's the data that's sitting there to begin with as well that's going to really make sure that automation is correct. So from sort of to go back to the question as well, in terms of how is that changing in terms of the team makeup, I wouldn't say that we're seeing the size of finance teams particularly growing or shrinking. I think they're probably pretty much staying the same. But what I think automation is doing is it's moving people away from repetitive sort of manual tasks that a system can pick up and do. So, if you can do the 90% of the tasks I'm manually doing and just double check that final 10%, then all the value add stuff the team can be doing is going to grow exponentially over time as well. So, like you say, I think it's a mix. It's both things at once. You can't have one and not the other.
I suppose another way you could look at it is you could look at, let's say I'm a tax analyst, junior tax analyst in a business, and I look over the course of the month, I look at every single task that I did or every responsibility that I hold within the business. And then you could go through each one and say, okay, well, which of these can actually be automated? Are there solutions that would kind of address these requirements? And, and that might be another way to look at it as well. So if you want to start with kind of how things are working today, and then see what can kind of fit around it and complement the existing functions that your business is running. No two finance functions or tax functions are exactly the same. For example, I've seen tax functions that also take on payroll. I've also seen tax functions that take on customs and trade, which is not the core of what they do. But again, every business is different. So you could map out sort of what you do and then start to look at sort of technology around that as well. And then, of course, the limitations is very, very key. We couldn't do a transformation topic without covering AI. So, Jamie, I think you had a couple of comments around this as well.
Yeah, we mentioned it earlier. I mean, when you think about automation, AI is right part of that topic. When you think about the team makeup and the dynamic and what that's going to look like, again, AI is very much part of that topic. And again, you look in any article, you look at any future of the ERP space or the future of finance space, it talks about AI. What's interesting to us is that that's not coming through in requirements from customers at all. It's maybe a 1% requirement for day one for 2024 to have any sort of AI embedded in an ERP or wider functions. So it's basically true that people want to get their house in order first, make sure their finance function is correct, make sure their approvals are correct, AR, AP, GL, project management, CRM, billing, RevRec, depreciation, etc. They get that right, they get the data right, they get the processes right. And then in years to come, or it'll be a sort of a trickle down effect, it'll be a sort of a drip feeding into the ERP of what they're going to do with that data around AI. So we're not seeing a lot in the space of a lot of AI embedded into ERP, and there's a few reasons around that. What we are seeing is it in analytics tools, all of the AI and ML sort of is happening there because it's a much safer space. Often you don't want your ERP data to have AI against it because it's very often HR-centric data or expense-centric data, and there's concerns around that. But I think most importantly is you have dirty data to begin with, which a lot of customers do. The AI off the back of that is going to be very much pointless, as we see with ChatGPT and others. You're not getting very consistent, correct data because it's the language model that it's built on is not very robust. So we're starting to see it in an ERP very slowly. I think things like customer invoice creation, so getting the ERP to automatically create the text around customer invoices, like sort of case management, so booking tickets and customers saying we have a problem. Again, we're seeing AI around that, which is great. We are seeing it again in the analytics tools more around trends and predictive analysis. But for the large part in the ERP, people aren't focusing on it. I wouldn't bother to focus on it yet. I think what you do want to do is partner with big companies that are investing in it, that are looking into it in years to come as well. So that's my perception on it. Yeah, very
much get your house in order first. Everything is underpinned by data, so the cleanliness of that as well. I'm sure we've all tried ChatGPT, and if you ask general questions, it's pretty good, and it's very uses very natural kind of language as well. But then when you start asking like very technical questions around IFRS standards or US GAAP to UK GAAP conversion, whatever it happens to be, it's probably not going to be very good. Now that's just inherently down to the data set that they're using. They use whatever is available on the internet, and we all know kind of what the internet looks like in 2024. I think you are already benefiting from AI without realizing, because solution vendors, are already using it and building it into their solutions. I want to give a couple of examples. One of the services that we offer is a customs classification service, as I mentioned. We use our own technology to do a first pass, and then we also kind of have human experts to review it. What we're doing at the moment is taking the data, the data points, the item description, the quantity, the weight, whatever it happens to be. But we're also trained an algorithm to understand the product image to improve the accuracy of the classification before it gets to the human reviews. So again, anyone who's using our managed classification service is already benefiting from it. I mentioned earlier on that we have 300 people who work on content research around sort of tax all around the world. We are using web scraping to identify and detect changes in sort of legislative kind of websites. And then we're using AI to summarize the changes, so our researchers don't have to read line by line to work out what's changed. And then we also have a feedback loop going on as well. So, the human will assess the summary and say, well, this is actually accurate, and they'll take, or if there's something wrong with the summary, they haven't picked up the key points, they'll feed that back, and then that goes into retrain and calibrate the AI that we're using as well. So again, you're already benefiting from it. Before we move on to the next topic, I want to kind of mention a couple of questions that we've had. So from David, we've just had a question about automation of calculations. So if a new product is launched, would you not expect the tax engine to identify the product quoted is not recorded in the tax reference data? Absolutely. So it should, there should be some sort of a flag, but again, that depends on how you've set that up. And there's no point in it flagging the transaction if no one's actually going to do anything about it. Usually a tax engine can't force an ERP not to issue an invoice. So you'd still want to build processes around it, but absolutely, a tax engine should flag when it's a new product that it doesn't understand. But again, depends on how you've configured it. We've also had a question from Sarah Edwards around, can you explain e-invoicing? Have never heard of this until last week. Now I've heard it nonstop. Sarah, you're right. It's very much sort of flavor of the month at the moment. When I started my career in indirect taxes, it just never featured in sort of, the areas that I was working in. Many countries around the world are mandating the use of electronic invoices for, sending to business to business. So I mentioned countries like Brazil and Italy that already have requirements like this. What this means is that you cannot send a PDF invoice. You have to send invoices in a digital file in a format that a computer can read. So it will usually be like an XML or a TXT file or something like that. And it has to be transmitted through sort of a network as well. Now that transmission process, the exact format is very specific to every country as well. There's a couple of different reasons why countries are introducing e-invoicing mandates. The chief one is the VAT gap. So the European Union are also looking to bring this in. It's been delayed until 2030, 2032 at the moment. But again, they estimated that the VAT gap in the European Union was about 93 billion euros. And what they've said is, we're looking to close that gap by introducing e-invoicing. Hopefully that answers your question. I'm happy to send additional information about e-invoicing as well.
And I think this is so prevalent now that we're both, Oracle and Avalara, pairing to produce in systems, e-invoicing regulation, because it's so apparent and it's coming up so quickly now.
And we've had a question from Imtiaz. In which areas do you expect the biggest AI expectation gaps? E.g., is it around integration, data analysis, process improvement, and conversely, best and most cost-effective use cases for the finance function? I think, Jamie, that one's for you.
Yeah, I'll start at the end. The most common use cases we're seeing things like OCR and bill capture. I wouldn't class that as pure AI, it's probably more machine learning, but that again, almost all of our customers are coming to us now to say we want a touchless AP process. A bill comes into my email inbox, a system picks it up, reads it on a line level detail, brings it into my ERP, it gets approved and it gets paid. So that is probably the best because it's a very repetitive, it's a very, very robust process as long as your suppliers are getting the same sort of email, same sort of invoices to you. As I said, also things like customer comms. So being able for the system to produce an invoice in a particular format that your customer would expect to see it. Again, it's quite a closed case example and use case, so the system isn't going to do too much there. Things around HR as well, so things like sort of announcements to teams or building goals. Again, when you've got your HR embedded in your ERP, we can see that as well being a pretty good use case for it. The biggest expectation gaps from an ERP perspective is that just the data. We don't see a lot from a data perspective sitting in your ERP, and things are moving away, as I said earlier, around your data, your historic data sitting there. So your analytics tools are the best place to do it. It's the safest place to do it. And you can also pick and choose where data is coming from to build the language model from them, which to do AI. So we are seeing it, as I said, we're personally at Oracle embedding it in the system, but not an awful lot of it. Just really, like I said, around planning, OCR and the text creation for now. What I think it will get to in years to come is a lot more in terms of report creation. So you just type a query into your ERP to say, build me a report with XYZ as my criteria, and think about how long that takes now and how long that will take. So I think that's where it will get to. I think that will happen in years to come, 2025, 2026. We're not going to see that this year yet.
Cool. I hope that answers your question, MTS. So, Jamie, I think that's, again, we tried to kind of keep the focus on a couple of specific topics because, again, this area is broad. We could talk forever. But, we did want to leave you with a couple of kind of takeaways or conclusions, hopefully to kind of wrap all of this up. I realize we've covered a lot of ground today as well. I think, again, AI, very interesting. Again, we're just at the beginning of it. Let's see what it does. And again, let's take the quick wins, which I think, MTS, that's very much what your question is getting towards. But I think, let's start with what we already have in terms of the existing tech stack. We've emphasized it again and again, whether it's from a tax or a finance perspective, data is everything. And I think, having a holistic management strategy for data, making sure it's consistent, accurate, and up to date, having processes around that. So for example, who owns a particular data point? Is it somebody in finance? Is it somebody in tax? Does it make sense to change that if it's a data point that's more important to tax, for example? And I mentioned that feedback loop kind of approach as well. Very much, I think, I mentioned this as well, the feedback loop. Let's see. So I think, playing to the strengths of each technology and vendor, taking a best of breed approach, I wouldn't be scared of that. And Jamie, you talked about integrating an expense management system and how you managed to get that up sort of basically overnight. I think,
I mean, as I said earlier, I think the expectations are still very high on an ERP, but I wouldn't get your ERP to do everything or any system to do everything because the connection between systems is so much easier to do. There are middlewares, but often that's not needed anymore. So don't over expect from what these systems can do. Make sure you're pairing with something that does it very well and just build your stack over time. Often it's very painful. You want to change everything all at once. make sure you're, as we say, focusing on the finance function, the absolute mandatory requirements and compliant points, and then build as you go with the best of breed. Yeah, that's a good way of saying it.
Yeah, and I think, from our perspective, that's very much our view as well, which is why we partner with, providers like Oracle NetSuite. I think it's most mentioning there are significant advantages of having standalone technology integrated with your ERP. Let's say you manage the tax function or finance function for a very acquisitive business. So you've got systems all over the place on different versions and different processes for each of these versions as well. Now, if you had a tax engine kind of overlaying kind of all of these systems, and maybe you're also going through a finance transformation where you're consolidating all of them into a single system, a brand new system, greenfield. Again, you have to think about the consistency of your tax reporting, your tax compliance requirements. If you are integrating all of that with a single source of truth for tax, that can be really powerful as well. Similarly for e-invoicing as well, you have to think about, well, maybe you've got NetSuite and then you've got 10 different boundary systems that are sending and receiving invoices. Let's say, you're in countries where you need to have issue and receive e-invoices. The thinking is, well, do you want to maintain that kind of functionality and license that kind of functionality? Most ERPs will charge you additional fees for that. Do you want to do that in every single system that has the capability of sending and receiving invoices? Or does it make more sense to, have a data lake, for example, and then to integrate that data lake with a single e-invoicing solution? So you've got sort of a single provider kind of covering all of your systems as well. So again, I think, there'll be times when it makes more sense to kind of stay within the ERP. And that it makes sense to augment what the ERP can do with a third-party solution, like many of the things that we offer. Yeah, but I think it's always going to be sort of a balance, I should mention, in terms of integrations, we have been in the business for 20 years. So during the course of the 20 years, we've built out more than 1,200 pre-built connectors to make it easier, to connect us with another system. Tax solutions don't sit by themselves. They're always integrated, and, we depend on data from upstream, which is very much the accounting system or the billing system, in order for us to work as well. I had a quick look in the system. We have more than 150 customers in EMEA on NetSuite and then connected to our tax calculation engine. So again, there's proof in the pudding. There's a reason why businesses do this as well. So I think that's everything that Jamie and I wanted to cover. I just realized we have about 3 minutes to spare, but if there are any questions, we'd be happy to address them as well.
Thanks both. I mean, I found that really interesting, and you've answered all the questions as we've gone through the webinar, which has made my life very easy. Just, I suppose, in 30 seconds each, could you just talk through what are the main challenges of implementing software? You've talked through all the benefits that NetSuite, Avalara, and similar technologies can offer, but what's the challenges of introducing them?
Jamie, why don't you start?
Oh, well, go on, Chris.
Look, a moving target always makes it hard. If you're going through a finance transformation and then on top of that, you're trying to integrate, tax solutions along with it, but at the same time, it can give you that consistency if you manage to pull it off. Having a good implementer, whether it's an existing system integrator that you work with or, a specialist, we work with a number of tax technology specialists who, day in, day out implement these kinds of solutions. So, we'd be happy to recommend any of these certified implementers that, specialize in this area as well. That can just make it so much easier because they do this day in, day out.
Awesome. And yeah, and I have three threads to this, I guess. Data cleanse. So getting your existing data clean. Don't wait too long to do that. You can start now. Resourcing. It is a lot of work to put in any system. Data migration always takes slightly longer than you think. So try and understand that people have day jobs on top of this. And then your ERP choice. So don't bite off more modules than you can chew. I know everything looks very attractive and probably better than what you're doing now. Start small. I think, bite small, chew fast, and then wait for later phases, get everything right and go again.
Great, thanks guys. That's perfect answers. So that does bring us to the end of today's webinar. I'd like to thank you both again for your insight and your advice, and thank you to our listeners for your time and for some great questions throughout the webinar. Hope you've all found the session useful. A short feedback survey will pop up on your screen after the webinar finishes. Please do complete this, as your feedback is very important to us and helps us to shape future events. The webinar has been recorded and we'll send you a link to the on-demand recording tomorrow. So thanks again and goodbye.
Thank you, everyone. I see there are 2 additional questions. Jamie, I think they're for you. We've got our email addresses in the slides as well, which I think the ICAEW team has shared with you as well. So thank you.